What's up, everybody? Dave Bartosiak here, and I've got another chart of the day. Now, this one is, I guess, more of a, oh my gosh, look at what happened versus this sort of in-depth analysis that we typically do. But there's going to be a few gems in here. So let's go ahead and pull it up. It is Cassava Sciences, ticker SAVA, and a couple of things I want to point out, right? The dramatic spike up on this stock took it almost to $1.50, and this is back in 2021, more specifically July 2021, when this thing goes nuts, right? And then what's happened since then? So, one thing I want to point out here, like I said, it's going to be a little different of a charting session here. When you see these sort of spikes, even 1 day, 2 day, 3 day spikes that immediately get sold off, spike and sell, a spike and sell, right? That's not really conducive for those long-term investors, right? So this is more of, I don't want to say these are like traps and these days they spike up, but they're kind of like traps, okay? Where you get a ton of enthusiasm and these stocks are kind of quote unquote memey, right? Where it's real popular on social media and people think they're going to go to a bazillion and they're going to moon. And then what happens is Wall Street comes in and just pounds it down the hallway. So this happens several times with the stock where you get these spikes up and then inevitably they get sold off. And this is where using the 50-day and the 200-day can really help you as an investor, because if a stock spends a ton of time below that 200-day moving average, or when it gets up above it, you still have a series of, descending highs. It's not a good sign for the long term. It's not like, other stocks that we've seen where they're building confidence over the long run and, the moving average, the long term, are moving up. Note the slope of this. So most of the time along this ride, there are brief periods, right, where it's positive, but for the most part, the slope of the 200-day moving average is negative. So that's a big warning sign in a stock like this, and in any stock, right? Now here is the snafu. Is it looked like things were turning around. So you get the big jump from the summertime. We get up over that 200-day. Feels like it troughed, right? It feels like we started to crank on back up. At least the 50-day did. We have a golden cross here. Things are looking good. You still have this big spike that gets sold off, but it felt like things were changing inside. It just did. And I could see that, how investors could fall for something like that. I totally get it. And granted, we're playing Monday morning quarterback here too. So this isn't meant as like a not a boo-boo to anybody. Just, things that are warning signs, right? Something that this is all about probabilities, right? So when you see this constant negative slope, the odds are not in your favor that things are instantly going to turn around, right? That's kind of what I'm getting at here. Is there are no absolutes in this game, but there are hits, and this was sneaky because that 200-day started to tick up, 50-day started to tick up. But I will say that when you have a real turnaround in a stock, you don't typically see a stock that finally breaks above its 200-day and then immediately fails at the 50. That's typically not the sign of a turnaround. What you usually have is once it finally breaks above that 200, retest the 50, there's usually buyers at that 50. So when you get that retest and it fails again, that's not a great sign. Now, no one really knew 100% what was going to happen when they had, Cassava had really an update to the business yesterday, completely fell out of bed. And I mean completely. 83% to the downside. I mean, that's just soul crushing. Essentially, their Alzheimer drug landed as a dud, right? In the phase 3 study, there's no real difference between it and the placebo on Alzheimer's patients. That's not good when you're banking on that for your whole entire company. That's why the stock is down under $4 right now. And when you zoom out to the big picture, it's gut wrenching. Honestly, it's heartbreaking. You hate to see this, right? But it happens. And again, so what are some warning signs to look for in the future when you're messing around stocks like this? A negatively sloped 200-day, big warning sign, right? Anytime a rally comes up, it gets sold. Obviously, another warning sign. But here on the recovery, this is a point I think a lot of people can look at and learn from, is when a stock finally creeps back up over its 200 day and it comes down to retest that 50 day and it fails at the 50 day, it's not a good thing. So this is really important, is that spike up, and then when it retests, are there buyers? And that can help you enter some really higher probability trades and avoid ones that are lower probability, right? And again, speaking of probabilities, not absolutes, because I'm sure you can point out 1,000 charts that go, oh, what? Wait, look, it bounced. But then I could point out 1,000,000 where it didn't, right? So it's all about probability. So those are just some things to look for. Again, this is sort of a post-mortem here, where it's tough to see, right? Because nobody wants to see a company go to basically zero. Nobody wants to see investors lose their money. So these are just warning signs. And I think I'll do every once in a while, we'll look at a chart that maybe it looks like things are developing sort of in a negative way to kind of point it out. So we're not always playing, Monday morning quarterback on these things. And I understand. I get it. I know what we're doing. So just letting you know. All right. Well, there you have it for my chart of the day here. Be sure to follow the author here on Zacks.com so you can stay on top of all these right when I put them out. Also, subscribe to the YouTube channel so you can get everybody else's videos that they're doing, because we do pump out a lot of them. So for everybody here at Zacks.com, I'm Dave Bartosiak, and I'll see you tomorrow.